Hello everyone, hello traders, welcome on board. It's March 25th 2024, so let me know if everything works fine. Can you see my screen? Can you hear my voice? Hey team, how are you? Juan, Carlos, welcome here. So it looks like that everything is fine. Okay, so I'm again a bit didn't feel well through weekend. It looks like I caught some cold here. You know, it's that time of the year, but I hope my voice will be okay through the webinar, and that I will be able to to finish this as planned. Okay, so what's going on? Well, as you know, last week we had a very interesting spins in the markets. Firstly, dollar drops because of dovish Fed. They are still planning for 3 potential rate cuts this year. So the reason why dollar actually fell at the start of that week is because Powell somehow said that they are not concerned about the recent inflation figures. So even if there is slightly tick to the upside on inflation, there are still most likely going to look for potential cuts this year, because overall path for inflation is still that prices are cooling down. Okay, but then of course when Fed was behind, what happened is that actually other currencies turned to the downside, because Swiss National Bank, as you know, surprised. We talked about this in that webinar on Monday. We mentioned and even covered Euro Swiss and Dollar Swiss. And then we also had the same day dovish Bank of England. So now it looks like that there are central banks that could follow each other. So whenever there is a new central bank's policy decision, its currency could drop in value during this time. So that's why we have seen pound moving to the downside, Swiss franc, and obviously every other currency has been pulled to the downside because of dollar strength that occurred over then later on in that week. Also, we have some ECB comments from the members that are saying that maybe they should consider potential cuts, maybe even before summer. Okay, so what happened on the market is we have seen a pretty strong drop. Now I'm looking here at the overlay chart, and I will go back to that's happened actually when the market turned to the downside. I believe it was here on Thursday. Okay, so you can see that all of the markets came to the downside, but notice that Mexican peso and stocks in general are still doing well. So if there is any currency, okay, that could potentially still see move to the upside or do relatively well despite some dollar strength overall, is Mexican peso. This one could either stay sideways or even turn to the downside if we see some rallies on other currencies, because stocks are still, as I said, doing quite well. But then you have here at the bottom, you have metals. As you know, they have seen a pretty interesting strong reversals, and even commodity currencies move this path. Even energy prices have seen slightly weakened. Okay, well, if you look here at silver, keep in mind that silver has seen a very strong drop and it's still down 3.6%. So I think that metals could potentially see much weaker prices after potential current intraday rally that we are seeing. I think that silver has a very nice resistance around $25, gold around 21.80-90, where we are actually trading right now at this moment. So overall, I still think that now when Fed is behind and when other central banks will be on the schedule, I think that it's important to keep in mind that these currencies could obviously fail if central banks will be dovish. On Wednesday, we have CPI from Australia, so maybe that's the next currency which could be very interesting and attractive for potential drop. Keep in mind, let me check keep in mind that if we go to Forex Factory here, I think it's on Wednesday. Okay, so expectations are for 3.5%. The previous reading was 3.4, so slightly moved to the upside. But notice that the readings for the past few months, the inflation was constantly cooling down. Okay, so in my opinion, if we again came around 3.4 or even lower, I think that Aussie could really see a very strong drop and reversal to the downside, especially because I think that central banks will try to follow each other. Okay, so if this data comes in around 3.4 or weaken or even lower, I think that Aussie is a short. Okay, now since I mentioned that Aussie, you can see that we have a pretty interesting bearish potential development here. It can be a triangle, okay, an A, B, C, D, E pattern. The most important is this structure. The first part here has been in 3 waves, okay, that rise. So it means that this is either completed correction, if we think that wave B has ended here, or maybe part of a complex correction. I think it can be part of this triangle. So with this potential dovish view, if inflation comes to the downside, I think that Aussie maybe could stay sideways now till Wednesday and then potential drop. So I definitely will have a very close eye on this one. As I said, even metals are looking for potential deeper lower pullbacks. Okay, so I think that Aussie could be definitely very interesting here. I would be wrong obviously if we see break here above March 08 high, then of course I will be wrong. I will have to adjust the wave count, but as right now, like everything shows, I think that the dollar in general has room for more strength. Now, one of the reasons why euro dollar came to the downside despite US yields weakening is, if you look here back, so below we have the euro dollar and here at the top we have the US yields, and just a second, we have US yields, okay, and German yields, and you can see actually that yields in Germany were falling faster than one in the US. Okay, so rate differential sent the euro dollar to the downside because rates in Europe fell faster than one in the US. Okay, so these rate differentials, and as I said, central banks events, policy decisions is something that will drive the currency markets around. Okay, but overall, if we look here, on the US yields, okay, I still think that we are here in a corrective phase and that sooner or later this one will turn to the downside, but maybe there should be some actions taken, maybe from the Fed, or there should be more stronger language that they are really going to cut. Maybe they should be first the next bank after Swiss National Bank cut last week. Okay, so if that would be the case, then maybe this will have an impact on overall dollar weakness, which could potentially show up still in the next few months. But we have time, still some time left till dollar will complete the current corrective recovery. But overall, I still think that US yields will come to the downside. I can see that Bitcoin is breaking higher, so we actually are long Bitcoin, so that's why I have this alert out. Okay, now if we take a look on dollar index itself, you can clearly see that this whole price action here looks to be like in a neutral zone, but I think that there is room for more upside because this drop has been made in 3 waves. Okay, it can be even maybe a triangle here for a wave B if we see something more complex, but overall I think that there can be more upside after these pullbacks. But this is still only temporary recovery in my opinion. I'm tracking potentially corrective rise, which is now going to be much deeper, it appears, from these December lows, but very strong resistance still around 105 up to 106 area. Also another wave count that it's worth to keep an eye on is potential triangle here if we're just chopping around. Okay, and if these central banks will really make some nasty swings on the FX, then this one is also very important in my opinion, but it's bearish pattern. Okay, so overall, longer term, or I should say by the end of the year, I think the dollar will be lower, but for the next maybe few weeks, maybe even month or 2 months, I think the dollar will either stay sideways or potentially even see more upside. Now, if we take a look on dollar Swiss, so dollar Swiss came to the upside as last time we discussed that price was around 88.40. So we were looking for a push to the upside because we have seen this ABC correction. So we said that inflation in Switzerland came back to 1.2%, and of course they could potentially cut the rates, and actually that was the main trigger for this very strong move to the upside. It looks like that we have now 5 waves up, so I'm not sure if wave 5 is maybe, obviously it's already at potential resistance, but if we see much more upside, and even if price would break above 91.22, then wave 3 would be the shortest. And what that means is that current rise is going to be much stronger and much more extended. But what is the most important here is that we have this broken trend line. So I think that obviously trend is changing, and that after the next pullbacks, I think that we could see more upside. But that doesn't mean that overall dollar should strengthen. It means that Swiss franc, because of their policy decisions, could be very weak. If we look at the euro Swiss franc, you can also see this one breaking out of this downward channel. And what's very interesting from an Elliott wave perspective, or poor technical analysis if you want, is that we breached these lows that is very important, as you know, back in 2015, and then we also triggered a new low here in at the start of the year, actually around there, or at the end of 2023. So market moved to new lows, but notice that now it recovered above both previous swing lows. So in my opinion, that's a pretty interesting price action, which suggests that we are bottoming. And since we have a very strong move to the upside and dollar Swiss is rallying in 5 waves, I think that this one is going higher. Okay, now let's take a look on dollar yen. So dollar yen is doing some very interesting move to the upside. So as you know, they decided to leave the rates after a long period of time. Everyone expected this, but what market does the opposite of what most of us expected. Even myself, obviously, I would not be surprised if Japanese yen would strengthen, but this was not the case, because always when one thing is done, when one hike or cut is done, market participants or speculators will try to look in the future what banks may do in the upcoming meetings. Okay, so that's how they position themselves for potential market swings. And actually everyone believes now that maybe that was one hike and now they are done. Okay, so that's why dollar yen is turning to the upside. And also Japanese yen weakness in overall could be linked to stocks as well. As you know, stocks are still in uptrend, and US yields, by the way, are still somehow in this corrective recovery from start of the year. Okay, so this is definitely something that also can have this impact on dollar yen. But dollar yen here, it's an impulsive uptrend. We are breaking out of this triangle here, so maybe that will be another retest of the triangle line, which happened here last week. So very nice support, I think, for potential longs here, or to join this trend could be in between 150 to 150.80. So maybe slightly more downside here could be seen, and then watch out for next push higher. I just really think that this could happen. But whenever we start approaching 153, I just think that if there is anything what could make this trend or turn this trend around, maybe there could be some interventions from Bank of Japan. Okay, and this could potentially, despite recent price action, this could make very interesting reversals on this pair as well. Now let's take a look also on euro dollar. So euro dollar here is breaking this channel, so we either stay sideways here or maybe even slightly more weakness. But overall, I just think that that this pair is not really ready to take the bullish action just yet. Unfortunately, this rise here from that February lows has been made by 3 waves, okay? But I still think that the whole move from December of start of the year is going to be corrective, but just longer and more complex, more longer in time and more complex in price. But overall, I still think that euro dollar could potentially see or attract some new buyers. Still potentially could find new buyers, but it looks like that maybe this can happen with a delay. Even if we, let's say, even if we start breaking here above 109.25 or so, what happens is that this recovery from that low will just become even more complex. That would be in 3 waves, and this drop would then be counted in 3 waves. So the whole situations for the euro dollar, in my opinion, will become extremely challenging. Okay. Now let's take a look also on crude oil. So crude oil is at the potential resistance here for this week. We have seen some very nice reversals at the end of the last week. We stopped at the upper trend line of this corrective channel. So I think that there is a chance that sooner or later crude oil could potentially see a reversal back to the downside, because that was a drop in 5 waves, and this looks like a corrective recovery. Okay, so I think that crude oil could come under pressure. Of course, if this would really be the case in the next few months, this can potentially even make reversals regarding the inflations and future expectations. Okay, now we talked about gold. Last week, as you know, we said a very nice support for gold is going to be here at the previous highs, December spike. It played out very perfectly. It was a beautiful reaction to the upside. Then we tracked this to be a 5th wave, and market turned back lower. It looks like that we could be now headed for sideways or even bearish price action here in the near future, because in my opinion that's only first leg from the highs, and you also have a divergence here as well. So clearly bulls can be looking to complete this impulsive recovery. So if I'm not wrong, then obviously we are at least going to see an ABC move to the downside. Okay, so watch out for potential more weakness here, and this could, if really would happen, this could have some also some bearish downside pressure for Aussie. But as we said earlier, Aussie could be in a wave E, so maybe slightly more upside there, and time is also on the side of the potential recovery on Aussie, because wave E is missing till Wednesday. Now let's take a look on the S&P 500. So the S&P 500 is trading at potential resistance on a smaller time frame, which by the way is the wave count that we regularly share with our members, is showing us that we could be at the end of this current stage, could be wave A of a very complex recovery for wave B that belongs to a higher degree correction. However, I think that there is not a lot of chance for this wave count to play out. But why I still leave this wave count on the table is because even if that would really be the case, okay, it's still incomplete recovery. So even with some limited upside, okay, I still think that there is room for more gains after the next pullback. But maybe more appropriate wave count is an impulse, okay? But even this one suggests that we are potentially moving into this resistance. There can be some pullbacks, and then watch out for potential more upside after this 4th wave retracement. So we can be at some extremes here short term regarding stocks. I also like let me just, okay, I also like how VIX is playing out here. Okay, so you can see here that VIX is actually in range. Okay, we are seeing potentially S&P 500 at the resistance for after these 5 waves up. Okay, we are not bearish, we are just expecting maybe some retracements before market moves to the upside. And if you look here at VIX, known as fear index, you can actually see that that there is still plenty of room till there is a new opportunity to buy stocks, because you have to see an increase in fear. Okay, you have to see some prices that will make a very sharp drop, and that would potentially cause a short-term fear. And if VIX would be trading at that stage around these levels, I think that that's the area when stocks could be actually at the support. But now we are at the opposite side of this range. So I think that now it's time that when the S&P 500 could really be trading at potential resistance. Just be aware that there can be some pullbacks. Okay, but single stocks, some of them are still doing fine. Here we have Microsoft, very beautiful 5 waves up within an extended wave 3. So maybe we are now moving into some short-term resistance levels. But overall, I think that this trend should resume after the next pullback. Just be aware that if we come back, 400 is going to be a very nice, very attractive support at the former wave 4. If we take a look here on April, you can see this one is still in a corrective retracement. We talked about this one last time. I still think that there is a bit of room for more weakness here. Okay, even if it's wave C with limited upside, there is room for more short-term weakness. 165 is the support. So we could see a completion of this 5-wave drop that we are currently tracking from that January high. So there can be maybe some only short-term reversal and supports down there, but overall I think that there is a chance that this market will stabilize. Okay, but if we see later on break and rally back above 180, then I think that bull run will resume. Now okay, we have here, let me take a look on Amazon. So Amazon is also breaking out of this consolidation. It was very nice, beautiful short-term sideways price action for a wave 4 after this extension higher within a wave 3 here with a runaway gap, as you can see. So this gap, whenever occurs in the middle of a trend, then it means that this trend could stay in play for a while, because usually when gaps occurs, there can be filled relatively fast. Okay, if not, then they can stay open longer than we think. So I think that for now, still this market could be looking for potential all-time highs up here. Now let's take a look on PayPal. We haven't covered it much recently because market was just sideways, but now it looks like that finally is waking up. So what we are seeing is some very nice potential head and shoulders pattern here and also breaking out of the potential wedge. I think that this could make a room for this unfilled gap to be filled that goes back to August of last year. Okay, so I think that 72, 73, that's the upside potential for this recovery. And finally, let's take a look also on Google. This one is making some very beautiful reversal after 3 waves down. Notice how in the first leg, wave A occurred after the earnings report, then wave B filled this gap and market came back to the downside to the previous 4th wave. So that's actually textbook price action. Okay, still an uptrend, and then you have this 3-wave retracement into this triangle pivot area where was also this termination point of a wave 4, and now market recovers again in impulsive fashion. But notice that we have another gap here in the middle. So I think that this gap could be potentially very nice short-term support here around 141. So I'm looking for more upside here on Google while the market is trading above that low. I think that more upside here can be coming even towards 160, 165. Okay, and by the way, we will start, because there is a lot of requests for single stocks. So we have always been considering potential premium services for single stocks like reports or something, but for the start we may decide for some kind of a newsletter for one update per week, and we will see if there will be a lot of interest. I will definitely share you the links when we are finally decided to launch this. Okay, so where you will be able to subscribe absolutely free. So that's for Google. And now let's take a look on cryptocurrencies. So cryptocurrencies have seen some very interesting price action. As you know, we have seen some very strong drop. And if you remember correctly, what I said last time is that back then, when that's Ethereum, by the way, that back then we had increase in outflows, okay, at the highs. So back then this was telling us that traders are confident to hold their cryptocurrencies, so they were making a lot of transactions from exchanges to their private wallets. So I said for the bullish signal, what we should see is that there will be a lot of inflows to exchanges, because that would represent that there is a lot of fear going on. And definitely that has been the case. As you can see here on the Ethereum, we have seen a very strong drop in price, and then when retail traders and everyone are watching this price collapse for 20% or so, they're of course afraid that there will be much more downside. So they will be looking to book some of their profits. Some will even be liquidated if someone joined the trend very late. And you can clearly see that there was increase in these inflows down here exactly on that day. So it looks like that their traders made a lot of transactions to exchanges. And what market usually normally does when this happens at the extremes, does the opposite from the crowd. Okay, so it makes an unexpected very strong reversals. So far we have seen a very nice recovery, and looks like that there is room for slightly more upside. Now here's also a very interesting chart. It's showing Bitcoin volume on PayPal. Okay, and notice the transactions. Okay, the volume of Bitcoin here back on March 14th. Okay, that was March 13, 14 and 15. We don't have the latest data here, but you can clearly see that there was the highest volume in a while. Okay, so back then in March 14, that was actually a high or around there, a high on cryptocurrencies, and later on market moved to the downside. So I think that these volumes at extreme levels, okay, are very interesting and very important. Okay, it could give you maybe some kind of a signal when to go out, when to go in, but definitely it usually will occur at the extreme levels. Okay, now looking at maybe the updated wave count. So here we are in our app, and if we take a look here on crypto total market cap, you can clearly see that there was only a 3-wave drop, and then very nice recovery, broken trend line, and now we are again trying to recover, moving higher after a retest of this trend line support. So I think that more upside could be seen here. Of course, the price action itself could depend from coin to coin, but overall I still think that Bitcoin and Ethereum in the short term at least have more upside. Also, if you look at Bitcoin longs versus Bitcoin shorts, there were a lot of shorts, okay, much more compared to longs after this collapse, after the market made the pullback. So that's the area where you would expect that Bitcoin would stop down. When everyone is selling and are liquidated, that's when you actually should be aware that something else is going to happen, something unexpected. But I know even myself that it's not always easy to buy something that when it's falling very sharply. But that's why you maybe, if you're looking to invest into cryptocurrencies, maybe that's why you need to have some longer horizon for your potential investments, and just be aware that you can maybe add more or adjust your position if the market moves even lower. Okay, so time here is very important. You will not see this any kind of a reversals like 10-15% in just a very short period of time like this one, but obviously we are in some very volatile period because of central banks actions. Okay, now if we take a look also on on Bitcoin, clearly that was a free wave drop. Now we are recovering, and that was not the all-time high, that was the previous high. Okay, the all-time high is now here. Okay, so looks like that there can be more upside. It's a very strong move. So I'm not really sure if that's already wave free. Obviously, based in Elliott wave terms, it could easily be wave free within wave 5, meaning much more upside could be seen. But if suddenly, let's say that market surprise and we'll see a reversal back towards 64 or so, then this whole move from March 14 will be a complex correction. But the important is it would be a correction because the first leg here from the highs unfolded in 3 waves. So it's either completed wave 4 or wave 4 will get more complex. So if you're looking more like for short-term setups, then watch out for maybe for 66,000 or so. If we drop below that level, then complex correction could play out. As long as we are above that level, if you are already long maybe Bitcoin, then obviously just keep in mind that there can be more upside coming still. Looking at the Ethereum, it's lagging a bit, but even this one, in my opinion, shows a room for more upside. So let's assume that maybe as a based on alternation that this could be a wave B rally rather than a wave 3 of some new bullish cycle. But even this one has still maybe unfinished recovery here. You can see that wave C would equal to wave A around 3,700. Oops. Around there. Okay, so I think that there is room still for a little bit of more upside. Of course, I'm not sure where Bitcoin would be at that time, but definitely in the short term, this looks very interesting. If Ethereum goes back towards 3,400, then this will be a little bit more tricky and challenging. But overall, we still think that Ethereum is going to stay in a bullish phase. But of course, this will be delayed much further if we fall below 3,000. Okay, traders, I hope that you enjoyed this presentation. Please press a like, leave us a commentary if you will watch this recording later on. As I said, I will share the links in maybe in the next few days, where you will be able to sign up for free stock market reports. Okay, so we will start producing this one for free for the start. Then it will be like a beta version or so, and we'll see the response, and maybe we will launch the premium service and update you regularly on those single stocks that we are obviously already covering, as you may notice in our webinars for the last or past few months. Okay, so that's it for now. If you want more of this, our analysis on FX, some global markets like crude oil, metals, yields, and so on, or maybe cryptocurrencies, make sure to check our services at wavetraders.com. Okay, traders, have a good day, and don't forget on Friday there is a holiday in Europe, so markets could be a little bit still a little bit challenging, or maybe even reversing, because there will be also end of the month and end of this quarter. Okay, traders, good luck, bye.